Let's hear some music. I don't hear music, man.
Hola.
Well, I hear voices in my head, but that doesn't count. I want to hear music.
Great.
You guys live?
We're live?
Yes.
Hello, TikTok world. I'm here with Eliza. She's going to betray me one day and take over my business as soon as she figures out all the tax nuances, which she's working on right now. So we are going to talk about self-employed income and how you go about reporting it for tax purposes. Eliza is an up-and-coming entrepreneur. She thinks she is, and will eventually. So to get, you have to start here, which is you report it as self-employed income. So once you get up to, say a couple $100,000 in income, right? Then see what happens there. Over like even 125 grand, you're going to be in the highest income tax bracket, which is like 50%. Mm-hmm. So instead of paying 50%, even at 125, you can incorporate your company, and it's called a Canadian Controlled Private Corporation, a CCPC, and it has a special significance because you get special treatment tax-wise. You only pay 9% tax in the corporation, and you get the special capital gains exemption when you sell the shares in the corporation. So what it allows you, what your trajectory is to make, 125 approximately, anything over 125 in income. Once you get there, up to like say 200, 300 grand, in and around there, you would incorporate. Once you incorporate, now you only pay 9% in the incorporation. You can pay yourself a wage, which you would then pay, at a reduced rate, depending on how much you took out, right? So that's the best way to manage your affairs. You start as self-employed, register your business, report it on your personal tax return, and then when you get over 125, up to 200, 300, then you incorporate the Canadian Controlled Private Corporation, a CCPC. And then just imagine if you can make 850. Right now, the capital gains exemption is 850,000. So you could literally say year 2 you fluked out and you made 850,000. You could then sell the shares in the corporation and not pay any tax. So you're making 850 tax free. The reason the government does this is because more than 80% of the people in Canada, actually in the States as well, are small businesses.
Okay.
So they want to encourage small business and give them, the freedom to hire people. See, businesses are very good because, when you hire people, you're contributing to the economy. So the government wants you to do that, right? So, and then when you have wages, you are contributing in many ways because you're contributing to the employment insurance, you're contributing to the Canadian pension plan, which I'm going to talk to you about in a little bit because I get the feeling that you're approaching retirement pretty soon. So certainly Igor is over here, I can tell that. So let's jump into the CP.
Okay. Hold on.
You don't talk to stream. This is your main camera. So
This is my main camera?
And then you have
So
two.
you have to do the intro. Because we're already live on Facebook.
Right.
On Facebook, not on TikTok.
On TikTok, we're live for a long time.
And now
already.
we're on Facebook here?
And now we're on
Yeah.
Facebook
So
here.
do the
Right.
intro. People are waiting.
So people are waiting? How come Eliza looks better than me? Because in real life it doesn't look like that.
Okay, guys, you're live. Do the intro.
I see how it is. And that is why
Oh, we're
I'm
live?
taking over.
Okay, so Facebook Nation, this is Eliza and Fraser, the tax mechanic, one of the tax mechanics, the OG, let's call me. And we're talking about self-employed income and how to tax that and organize your affairs.
So I did
so-
have a question. So as soon as you earn over 125K, that's when you fall under that bracket, and or you need to do something else for that rule to apply for you.
Yeah, see, if you make up to at 100.
Yes.
Oh, that's that's Eliza's normal wake up time is right about now, 2:00. So
This
we're
is
alarming now.
time to post.
Oh, time to post, sure. It's time to wake up. So Up to 125. See, because your marginal rate at just over 125 is 50%. So then you have to start thinking about, do you want to continue making money being taxed at 50%?
Yeah.
Or do you want to shelter it in a corporation and pay only 9%? So it makes sense to do it in a corporation, pay 9%. Now, there's other costs involved. You have to pay, your handsome accountant, his fees. Mm-hmm. Well, in my case, that would be that.
Right.
And there's some legal fees too that, for maintaining the books. And so there is additional administrative cost, but you also get benefits of, you can deduct a lot of things in the corporation that you can't do personally. And you've got other tax planning that you can do. You can see once you have your money in a corporation, you can then pay yourself a salary. So you could pay yourself a salary at say $50,000, which would be taxed at less, like about 30%, as opposed to 50% if it was over 125,000. So just to give you the whole trajectory, up to about 125, you take it as self-employed income. Reported on your T1 under a T2125 business statement, and you pay your tax there. Once you get up in the 50% marginal rate, then you start thinking about, when do I want to kick in this corporation? And those things take in other things. Like once you get to that level, you may want to hire people, and you're incurring different costs. So you got to be careful of that, right? But what the advantage is, if you could do it for a couple of years and you can keep making money. And say you can make up to $850,000 tax free in a corporation because you get a small business exemption, and they do that to give you an incentive, right?
Okay.
They want you to start a small business, because small businesses, which makes up more than 80% of the economy in Canada and in the States as well, is it contributes to the economy. Small businesses. They buy supplies, so mom and pop shops, everything, they make everything hum, right? So, and they give you wages, you go out and spend your wages, and then it just, it has a money multiplier effect, right? Mm-hmm. So once you make $1, then you spend $1, then they spend $1, and then it keeps on going, right? So, but you have to give the entrepreneur, he's taking a big risk to start the business, so you have to give him an incentive to do that. And it's a pretty good incentive. $850,000 tax free. Sounds pretty good, eh?
That does.
Every night before I go to sleep, I say $850,000 tax free.
But there's, like you mentioned about the legal fees, that would be also nice to cover.
I try to keep those down, like, on the down low, right? Because,
but like many people don't know.
That's how we make our money, Eliza, right? So, no, there's legal fees and there's accounting fees.
But what do people actually need, and why do they need them?
They need accounting fees because you need to file a corporate return, right? Which is different from your personal tax return. So it's a corporation tax return. The corporation is actually is considered a person in the Income Tax Act. So there's reasons for that, but you're a separate entity. And so therefore you incur costs because for me, for example, to a typical T2, I charge starting at $1,500, right? Just to do the T2.
Okay.
So that's no bookkeeping, nothing else. So there's costs involved, right? Whereas, for a typical T1, basic one is $150 to $250 or whatever. So you can see you're incurring a little bit more cost. Plus now you got to keep bookkeeping. Then you got to file for HST. That's costs. Either you can do it yourself or hire an accountant, but you see you're incurring some costs as you're going along. But, you're also able to earn more income, right? And you can shelter more income. You're only getting taxed at 9%. So they give you enough wiggle room that you can incur these other costs and still have a decent cash flow, right?
And why is it better to hire an accountant or someone like you? Because in one of the previous videos on TikTok, you mentioned that many credits you're not aware of, and even something that you buy like a TurboTax, whatever, and you won't be able to
I think
those.
It's critical. Even, they always say a good accountant, a good lawyer, but I even say just, the accountant is critical, right?
Okay.
Because we understand tax and how to incorporate, and I live and breathe this every day. So I talk to Revenue Canada. I've got a team. I know all the ins and outs. I know without even looking at stuff, I can tell you you're in trouble, you're not, you're risky, you could be audited, and that's just from years of experience with it, right? So why not have somebody like that in your corner on your business and set you up properly? And plus you can call to have a relationship with an accountant. My clients can call me, text me anytime if they got a problem, or talk to one of my techs and get a quick answer. So it's like having, a coach in your corner for business. And certainly you need, legal advices and other things too along the way. But the accountant is really critical for setting up, because you need to set up your corporation, like the small business, for example. I have people come to me all the time. Oh, I should have done this years ago. I hear this so many times. And it's like, I'm just doing a fellow just now. He's in the movie industry, doing rentals, making like $100,000 a month. And no, I'm serious, $100,000 a month, just, and he's got 2 like beat up trucks, and sends, because they rent like crazy, and the margins are huge. And he doesn't have, all he's got is a bank account. He has no bookkeeping, no accounting, hasn't filed taxes. He's been doing this for 4 years. And then he's coming to me and he's like, sheepish and that, you got it. Because, Revenue Canada hasn't got a hold of him yet, but that's just a matter of time. And then when you're doing like anything else, when you let things get bad like that and you have to go back and fix it, it's always worse. It's always best to deal with things up front.
And like, when do you need to hire them? Because I feel like many people don't know when is exactly the
I would hire it right from the get-go. Why, even doing your personal tax return, hire an accountant. Why not? And whether it's me or somebody else, but have them do it. And then you could ask questions and...
But many people, because they start new, right? So they don't have much money yet, so they wait for first year, like do it at the end of the year.
How much is it to do a simple tax return? Like we charge like $150. You could still you still get somebody that you can talk to. So I don't buy that one. Okay.
Oh wow. Okay. Right. There's actually a really good question here. I forgot to incorporate. Can I take advantage of the new Cap X rules before year end?
New Cap. I forgot to incorporate. Well, actually, yes, you can, because you could incorporate now, and sometimes you can actually backdate the incorporation. But regardless of that, let's say that you started in I don't know what your parameters are there, but let's say you started in January, and you did incorporate, and you start making really good money, and you want to incorporate now. What I would do is I'd take all that money from January to now and include it in income after today, to say December 31st. That way you can shelter all that income, right? And you're allowed to do that because you can claim your income and expenses up to 4 years.
Okay.
Right? So you have that ability. So the short answer is yes to your question. Any tips on tax fraud? Well,
so
I would avoid that, because I don't know if you know this, but there's this guy called Bubba in prison, and I don't know, he's not a very good cellmate as far as I'm concerned from what I heard. Bubba? Yeah. He's like a big guy, and you don't want to go that route, okay? I would avoid the tax fraud.
Yeah, you know a lot, eh? What do you do if the CRA wants to audit you, but you lost the paperwork invoices?
Well, you could go to Mexico. They have really lax laws with that stuff, and if you're that out of it, that you don't have any invoices or anything, you're in pretty bad shape there. So I would come to...
there's I don't know, house burned, what?
Well, if your house
burned,
yes.
Is really bad.
Yeah, your dog ate all your bookkeeping?
Yeah.
Okay, that could happen.
Flooding.
That could happen. And then what you need to do is, then you need to build, they call it a lifestyle audit, right? Which I could do for you. So I would just look at, say you, for example, I would look at you and go, okay, you're driving a Lamborghini, you've got that $2 million condo, and you're out every night having machados and everything. So I'd peg you at about a couple $100,000 a year, and then you could start from there. You see what I mean? You have to make it kind of fit your lifestyle. But if you don't have any of those things and you're just getting by like a poor student, then you could get by on like say 2030. So really, you can estimate if you don't have your books and records, Krista. You can estimate.
Can you suddenly have that
There's another
lifestyle?
question here about bankruptcy here. I can't see the.
The bankruptcy? No, she just wrote file for
Krista,
bankruptcy.
file for
then.
bankruptcy. In 35 years, I've never had anybody file for bankruptcy. You never have to do that. Anybody says that you have to do that is lying to you, and is probably a trustee in bankruptcy. And those guys, I don't know, pretty shady character group of guys.
Oh, that's interesting.
Yeah, no, I never. Listen, you always have options, right? You can, cut a deal with Revenue Canada. You can cut a deal with even suppliers and that, and you don't need to go bankrupt.
Is it bad to apply for bankruptcy?
Well, I think it is bad for a couple of reasons. One, it ruins your credit for a number of years, and people think, oh, it's only for this and that, 3 years and that. It follows you, and so that part's bad. Morally, it's bad. Just for your self-respect. Seriously, those things affect you. I've got my brother-in-law, for example. He's such a dope, went bankrupt twice, right? And he's got no self-respect, and it shows. Like he's got one missing tooth, and he's a little overweight, and so.
How is this related? This is not related to.
That's a true story. Hey Tim, hope you're watching.
I've been self-employed since 2020. I recently stabbed 20 people. What should I do?
I recently stabbed 20 people.
Like pay stab? Like
Okay, I hope you mean staffed 20 people.
maybe stabbed.
If you hired, I'm just assuming you hired 20 people. Well, you know what? If self-employed since 2020 and hired people, you should incorporate. And like I said, you can sometimes go back a little bit. But even if you're self-employed and you don't have the incorporation, you've hired people, you can still claim that on your T1. I've been spending the money so capital will not be sheltered, and I'm looking at another 20K tax bill. Well, that's people getting into those problems where they basically spend their tax money.
But
right?
he continues.
Oh, can I buy something under the new CapEx rules to make a big write-off? I heard half-year rule waived. Well, that you could do that. You could buy, like, say, a vehicle or something like that, but you get certain write-offs. You could buy actually. You'd have to talk to somebody about it, but there's various things that can be expensed at various levels. They call them CCA rates. So video equipment, for example, probably you would expense it. Igor's got an $8,000 thing, right? So he probably expenses it a couple of grand every year, right? But these little cables and stuff like that, you would just expense it in 1 year, right? So it depends what you're doing. If you buy you could actually buy a TV. And I would argue some of the stuff too, like even the cameras, you could make an argument for writing it off in 1 year. You know why? Because you could say that it's based on the lifetime value of the asset. So you could say, and there's a very good argument for it, is that these things, as soon as you buy them, they're outdated like 2 months later. Like even look at your laptop and your cell phone. All these things there's a new version the next 3 months, right? So you can really excel. So the answer to your question is you could do that. That's go out and spend. I like that guy's head shape. Oh,
How did you say phallically what?
Okay, so my head shape.
It's great. Someone actually loves it.
That woman is fine. Easy, Greek Martin.
Are you from Toronto?
Are you from Toronto? Okay, I hope you're speaking to her because
No, this is to you.
Yes, we are. Okay, yeah, we're in Toronto. We're right down by Tax Court, 180 John Street. So come by and have a coffee. You can have a coffee with me and Eliza. The first one is on Eliza. Second one is on Eliza. What about?
Is that because I'm Ukrainian? Like what?
Yeah, Ukrainians love to buy coffee. Just come on by anytime.
What about the new temporary measures for immediate
expensing of capital property? Yeah, the new temporary measures, actually, I'm not completely up to speed on that, but what they are is they're giving accelerated rates, as I was just talking about with the various equipment, but you can do it actually for real property as well. So you'd have to look into it because it's new provisions, and there's quite a bit of provisions for what type of asset it is.
And actually, about the property
I've been in that building before. It has rats. No, it doesn't.
No, you haven't.
Who is this guy? Greet Martin. Dude, I just purchased a triplex last year, converted to a sixplex legally. Nice. Is a property management company considered a personal services company? No. No, it's not. A personal services company is when you have one person incorporated, and all they do is, like, say if Igor was incorporated and all he did was work for me, then that's a personal services business. He's only incorporating to just try and get around paying tax, and therefore you have to pay a personal services business rate, which is higher than say a small business corporation. Can I expense my renovations? Absolutely. And at what rate? Well, it depends what the renovations are. Like I said, CCA rates vary. So, if you do, additions, a betterment to a roof, for example, it's amortized over a longer period. Get 4 or 5% a year. It's not much. And but if you do something like a fridge and that, you could expense it over a couple of years. And at what rate? $500,000 in rentals. Well, if you got $500,000 in rentals, you've obviously done betterments to your property. So that would really you can amortize some of it, but you would also probably add it to your cost base. And what would happen there is when you sell it, you get to deduct those expenses from your purchase price.
What if you're not going to be selling it, or the goal is to sell it?
Well, if you're not going to be selling, then you would try to amortize whatever you could to reduce the tax liability on it. Okay, so I buy a property, incorporated property management company to get small business on gross rents. That's okay? Yeah, but it's not really okay because you're incorporating a property management company, but it sounds like you're just doing that and then managing your own property. And so that would not fly.
That's more like tax avoiding, right?
It's not really, because you can do that, but it'd be considered a personal services business and it'd be taxed at a higher rate. So you wouldn't get the 9%. You would definitely have to pay more. It's something like 33%. So, you should be aware of that. But just setting up, you got to be careful when you set up an incorporation and you just do the work for somebody else. Then Revenue Canada looks at, whether you're in an employment position or you're at third party. So you, for example, work exclusively for the tax mechanic.
Yeah.
So you're employed by the tax mechanic. Now, if you decide one day to go, you know what, I want to work for some other people as well, then you could be a subcontractor to me, and you can incorporate, and then you can work for various companies.
So it's more like you're a freelancer.
Right, and a freelancer, well, there's a subcontractor.
Yeah.
But a freelancer, or I don't really like freelancer because it's not the right term. Subcontractor, you're subbing yourself out to various other people. But you can't say that you're like you right now can't say you're a subcontractor. You only work for me.
Yeah.
So, plus you have a contract, but you can't then say, you want to be a subcontractor and report that way, because if you do that, then you avoid CPP, EI, and Canada Revenue Agency takes a very different view of that. Okay, so I buy.
They're not selling.
Not selling. Property is held in a different corp I also own. Yeah, well, that's fine. I'm just saying so you've got a corp with the property in it. You've got a corp that you want to do as property management. It just depends how the characteristics of the property management company. Is that property management company going to be doing property management for more than just your property? If it is, then you can get the SBD. And that's different from an STD, by the way.
Oh God, that's good. That's great. That's lovely.
Just
awesome.
want to clarify. Not selling. Properties held in a different corp I also own.
Also, something that's like talking about self-employed and your own businesses and stuff. People think that you need to earn under 30K, and that's you're safe from tax then.
Yeah.
And then they kind of keep themselves at 30K too.
Yeah.
So like, what's your
if
take
you
on that?
well for HST, you only have to register once you surpass 30K.
Okay.
But the logic there, I hear the logic all the time. Oh, I'll keep it under 30K so I don't pay HST. That's dumb, right? You want to make as much money. You want to increase your income, right?
Mm-hmm.
So you want to you want to register for HST. Once you register for HST, not only do you charge it to other people, but you get ITCs. So everything, all the GST you pay, you get back.
Do you do it after start earning over 30K or is
When you do it just before you're about to go over 30K.
okay?
So when you're grooving along, you're right about 29, you go, oh, I got to register for HST.
Yeah.
You don't have to do the part, but it helps.
Oh, cool. But yeah, I feel like even I have so many friends that are that are just working for some company, and then they're self-employed, doing some kind of side hustle,
Yeah.
doing under 30K in
Yeah.
that side
fine.
hustle.
That's fine.
But like they don't believe that they can grow more than that, you know, or that if they will start growing more, they'll start paying more taxes, and it's not as beneficial for them.
Well, yeah, we've talked about this a few times. I hear that, and I think you got to have the right perspective. Okay, so it's like the dog, the tail wagging the dog. The tail is like tax, right? So tax is just a function of if the dog is happy, the tail is going, right? And that's how you would think of tax. You don't do your decisions based on how the tail is wagging, right? You go as a dog, you go and eat and look for squirrels and do your business, right? But the tax just takes care of itself. So, don't worry about registering for HST. Go ahead and make more than 30,000. Then you're making more money.
But it's like sometimes the freaking tail is huge, you know? Like sometimes the tail is freaking like goes like that instead of just.
It's not. It's just do all the time. It's like,
Doesn't
listen.
feel like it.
I tell you, we should flip the narrative, right? It should be the more tax you pay, the better. It's the way you should think of it. It's like you should want to pay more tax, because if you pay more tax, you've made more money. And isn't the goal to make more money?
It is.
That's it. So make more money. So what? You pay more tax.
So I can go to my mom and be like, Mom, I made more money, but I actually don't have them, but I made them.
Well, I used to do the tax return for John DePoche, and it's been a number of years, so I can tell people this. But so his tax bill was like 1 year, it was like $7 million. He made $15 million, so he owed $7 million. And I did some tax loss amalgamations, really high level stuff, because I can do that. And ended up saving him $1 million, but he still had to cut a check for $6 million.
Okay.
After I told him that, he wouldn't talk to me for 3 weeks.
That's fair.
I'm like, dude. He would say, he was mad at me, right? He goes, $6 million, and he literally walked out of my office, did not call or talk to me for 3 weeks, and told everybody he was pissed at me, right? And then I was like, and then he came back, and I go, John, let's look at it another way, okay? You took home $9 million. Okay, I'm not gonna shed a tear for you. Get out of here, right?
Yeah, but when you're talking about millions, yeah. But when you're like,
But it's the same thing. All it is adding zeros. That's the only difference. The more tax you pay, the better. Period.
I was even talking to a friend of mine yesterday. So she earns about 60K a year, maybe just a bit more. And she was like, I literally had more money, or like was earning more money before, when I was like at 30K. So when she was earning 30K, she was getting back more.
I've heard that sometimes before.
Yeah,
and no, I've got this tool at home. It's called an abacus, right? It's for adding. I think she should start there, right? Start with your fingers, the abacus, and then maybe graduate to a calculator, because that doesn't make any sense. Okay, you're not adding properly, something wrong, right?
Maybe
because
that.
some synapse is not connecting.
But like as soon as you start earning more, your tax grows, right? You need to pay more tax.
Yeah.
And you're left with increasing your income just a bit more every year instead of,
That's right. You're paying, the more money you make, the more tax you pay, but the more you make, right? That's what everybody forgets about. They're just focused on how much tax they're paying, right? I would love to pay $2 million tax next year. I would love it.
Yeah, absolutely.
Yeah,
but
'cause
you
that
need to
means I
jump
made $2 million,
from this tax that you pay right now to like earning more, doing
But,
more.
but you're just gradually, say from 30 to 60
yeah.
to 90 to, all you're doing is you're paying marginally more tax, but you're making marginally more money. So you are still taking home more money. Okay?
Mm-hmm.
You're never in that situation where it's better to make less money. That's stupid.
Yeah.
I don't like to say stupid, but stupid.
Agreed.
Okay, geez, is there a time limit on these TikTok things? Oh, look, we got all kinds of questions we haven't been
Yeah.
answering here. Could
you
you
guys
touch the proper methods for Canadian stock trading taxation? Can you touch on the proper methods? Well, good question. What I find with stocks is that what people do is even the banks and the brokerages, they will give you complete details. Usually you get all the details for when you sell the stocks, right? So what you need to do is keep track of them, pretty closely. Because what can happen is you can buy, say, a stock, and I've seen it lots of times, this year, and sell it 30 years from now, right? So how do you know what your cost, 30 years from now, how do you know what your cost is? Unless you maintain those records, right?
Right.
And plus you could be adding to that position all the time, right? So what you want to do is make sure that with your brokerage, when you're, the best thing to do with stocks is you look at 30 days prior to the end of the year, look at your losers, and make sure and sell them. And if you still want to hang on to that position, you can buy them back in the new year, right? But you want to weed out the losers after a while, so that you don't end up just paying. Because if you just sell the winners, then you're going to pay tax on the winners, and you're going to be stuck with losers. So make sure that you have a look at that. Manage. First of all, keep detailed record keeping is the key, and second, once a year, and it doesn't take a lot to do it. People get too nebulous about it. It takes me 10 minutes looking at that, right? For $1 million portfolio, I could tell you what to do like that. You just look at, and you got to watch the superficial loss rules. So that's why you got to do it 30 days prior, because you can't sell a position and then buy it back the next day, because you're denied that loss if you do that. You have to wait 30 days. Okay. And that's because you can take advantage of market timing and crazy stuff like that. So they make you wait the 30 days. It's a rule that's been in place for a long time. Initial cap X GST recovery is being wasted if they had upfront CapEx to start businesses too.
And when is it beneficial to create a business for trading?
When is it? You know what? When is it? A good question. So, to create a business for trading, it's really, are you transacting, and is it in the nature of trade? So if your business is trading stocks and you're up over a couple of $100,000, I would incorporate, because now your business is, so that's when you would do that, is if you're making that your business. Be careful not to trade stocks though in your TFSA, because you'll be denied the tax shelter there. Marginal increase.
Referring to tax loss selling.
Yeah, I'm referring to tax loss selling, correct. And marginal increase, well, yeah, when you say marginal increase, I'm assuming he's referring to, as you're going up the scale, your marginal tax rate increases, but your marginal net income also increases. So that's what he's referring to when he says marginal increase. You're referring to tax loss, yep. Can you get small business deduction as an active stock trader? Well, you'd have to, like I said, you'd have to put it into a corporation, and you have to be working in the nature of trade. So you'd have to make that your business. If you did that, you could then get those advantages.
So they have to earn a certain amount?
No,
Or like how
but
to make
no,
it
but it has to be your business,
Okay.
right? So you have to be in the business of trading stocks, and if you're there as a day trader flipping stocks every day and watching BNN,
Yeah.
then you're in the business of trading stocks, right? But if you put it in, an ETF at the beginning of the year and leave it there for 30 years, that's not your business. Okay,
Right.
You're just investing. All right. Okay, I was referring to your example of your friend. Oh,
When they asked about touch on proper methods for Canadian stock trading taxation, and this is the marginal increase was referred to that. I guess that's what they meant. The marginal comment, yeah. But I can't remember either.
can't beat the bots today.
Thoughts?
I'm sorry, I don't understand where he's going with the marginal comment. Like,
Yeah, like it's
I'm
something
assuming
that
you're
we
mentioning
touched
that
on before.
if you could explain a little bit more, David, as to what you mean about the marginal comment. Like, you think that it's not fair that you're only making a marginal amount more, or can't beat the bots today? Free stas.
How are Leafs doing?
The Leafs. Okay.
A segue.
That's first of all, it's summertime, so we talk about the Jays and
They still can be doing
Vladdy
Okay.
broke out yesterday for boom. Okay, so I think we're 1.5 games up. I think we're rocking. And tell you, and all you Tampa Bay fans, see, okay, marginal comment was from 10 minutes ago when she was explaining her friend's situation. Right. Well, yeah, so for your friend going from 30 to 60, she's paying marginally more tax.
Yeah.
But she's still making more money. Okay? So my point with that is you're making it sound like made it sound like she's making more money when she's at 30 than she is at 60. And I've heard that various times because you think you're making more tax. And that's not the case. Not true, period. I can go through the numbers and the abacus, but just take my word for it, okay?
No, like I get it. It's just
It's always better to make more money.
absolutely. But there's almost
So
like there's
therefore,
this
given
gap.
that, it's always better to pay more tax.
Sure. Logically, it absolutely
I'm
makes
glad
sense.
we agree. We should be like, Democrats, Republicans, like represent them, and we could solve a lot of problems here, right?
Oh, great. In
Or
30
like say
minutes.
liberals and conservatives because we're in Canada.
But the question is why?
Okay, make sure you go out and vote PC, okay? We got to get the liberals out. Okay, marginal comment was from, okay, good. When she said she was taxed way more, she was only taxed on marginal increases. Yes, David, yes, I understand you now, and yes, he's with me, okay?
Okay.
So she's only taxed on marginal increases, right?
Okay.
Not overall paying more. Well, she is paying more tax overall, but she's also making more money. But exactly what he says there. David, you should be up here. I should be in there.
What are the marginal increases then? Like what is that?
Well, actually, there's like tax brackets, and I think last count is like something like 14 tax brackets.
Okay.
So you go from every time your income goes up, you pay a little bit more tax, a little bit more, and then there's surtaxes and everything. It's so complicated. You need somebody with a really high IQ like myself to just kind of decipher the whole thing, right?
Right.
But there's only one of me, and I've only got time for another couple more questions. Let me see. When she was taxed, okay, what are your thoughts on subsection 152.4? Woo! 152.4.
I need to bring in the book with us
All right.
next time.
Sorry, help me out with 152.4.
When do you move to higher tax bracket? It doesn't.
When you move to a higher tax bracket, it doesn't mean the whole income is taxed at the higher bracket. Correct. It's a marginal increase. Question. You guys are a cute couple. Excuse me,
Thank you, sir.
well, I guess that's okay. We can take that, but we're not a couple, okay? So let's get that clear.
As soon as you start explaining that, it's a loss.
Will you be... Oh, for God's sakes. What's the matter with you? Only the portion
Is
of
that because we
income-
have windows at the back? Oh my god.
Can we delete him?
Jesus.
Can we ban him?
Yeah.
Yeah, ban him.
Go. Bye.
Bye-bye.
Okay.
Good. No, you missed them. That one right there.
No, it's
Let 'em go?
gone.
All right. CRA made a $2 error. They didn't clear out one of my pools. I filed notice of objection, and now CRA is auditing me into statute bar years.
What?
Okay. I don't know. I think you should actually lay off the sauce because 2:35 is a little bit early to be starting drinking. Don't you think? Okay. Ladies and gentlemen, I think that's enough tax for one day. I like to keep it short because, not short, I mean, bah! Very good, David. Very good. Bah! All right. Is auditing me into statute bar years. Okay. So thanks for the questions, guys. We're going to be back. When are we going to be back again? Next week?
Next week.
We're going to let them know or something?
We'll let you know. We'll let you know. We'll let all of you know.
Yeah, and if you have any questions beforehand, go ahead and email them to me.
Make sure to follow us, too.
And follow us on social medias, okay? And especially TikTok. You got to blow up my TikTok, please.
Okay. This is
All right.
wonderful.
What's
Thank you
the
so much for
outro
the
music?
questions. Elevator. Can we get the elevator or the office music, please?
Yeah, can we get the office music? Can we get Michael Scott?
You said you were singing, no?
No, I'm going to. I'm very self-conscious now because of my fucking hair and. But
Goodbye.
See, you know what? Actually, The Office gives me a lot of confidence, right? Because I
course.
go, these idiots, man. If these idiots can do